Hello guys, I welcome you in this wonderful video. So there is something that I want to share with you today. As a technical trader myself, I've observed that there is one important thing that a trader needs to know before he executes his trade or before he makes a decision. And it is not just a matter of knowing how to do such things, but it is a matter of practicing and applying it as a habit, because it's gonna simplify your trading and it will be very easy for you to find beautiful entries. So before you execute that sell or that buy, it is very important for you to understand the flow of the particular market that we are trading. Or when I'm talking about the flow in simple words, it is very important to understand how the structure is changing as the market proceeds. So I'm talking about things like momentum, how the momentum is changing as the market moves on that particular direction, and how are the waves also being formed, how are the impulsive waves being formed, what are the patterns inside those waves. Because if you're going to execute a trade, you are replicating what has been happening recently. So if you don't know what has been happening recently, it will be very hard for you to monitor that particular position that you are opening, or even to find a good entry opportunity. So for you to find a good entry opportunity, you need to know that you have to invest more in understanding that particular flow or that particular behavior of that instrument that you are trading at that time when you are about to open that position, or at that time when you are analyzing your charts. So there is a simple tool that I want to share with you. It's a very simple indicator, and it is underrated. A lot of people, they undermine it, but I use it a lot, and it helps me to get those beautiful entries and to easily understand the flow of the market without the hassle that comes with other technical approaches. So I'm just going to highlight the indicator. Let me first erase. Before we continue, please note that this video is sponsored by Delta Exchange, a cryptocurrency trading platform that is not only limited to trading, it also offers investment opportunities, meaning you'll be able to earn without any effort. So if you're interested in digital coins, be free to check them out. The links are in the description below. I'm going to highlight the indicator. If you can see, it's obviously a moving average, and the period of the moving average is 100, just simple, nothing complicated. The length is just 100. So what I usually use this tool for, I know a lot of people they have other methods, like maybe trend lines and other stuff of identifying trends, but I don't use the moving average only to identify a trend. That's also part of it, but I don't use it primarily for that. So what I do is that, okay, firstly, if you are a trader and you're only relying on let's say you're relying only on trend lines to identify the market direction and the strength of the trend. Now, if you are relying only on trend lines, you need to know that there are disadvantages that comes with trend lines. Now, you have to use trend lines, but you shouldn't only rely on them when it comes to identifying the direction and the change of the market strength. Now, if I will maybe plot something like a trend line here, you can see that maybe you're gonna draw your trend line all the way up there. And you need to know that when the market shifts, which something that a lot of traders don't do, when the market shifts or when the market changes its flow in terms of the strength, you need to know that you need to also change the position of your trend lines. Now, for an example here, we can see that price now breached the trend line and went above it, but still proceeded going on a downward move. What you need to do then, you need to change where you position your trend line now as the market proceeds. And again, you see that we now receive some kind of a new high or a new flow, meaning this trend changes the way it is flowing. And then it also means that you have to redraw your trend lines again to kind of like fit the current flow of the market. So you see that when you rely only on trend lines, you have to keep changing them as the market proceeds. So what I usually do is that I will sometimes draw the trend lines there, not to actually rely on them in terms of the flow, but to kind of like show me when the market is shifting in terms of strength. But when it comes to identifying the flow of the market, I rely on the moving average. So how do I use it? If you can see, obviously we have in this case we have three scenarios that I just want to point out. So the first one, you can see that the market here was moving up, and then something happened around this area. The market shifted, and then it turned into a downward move. So these scenarios, both or not both, all of them, they are easily identified through the moving average. For an example, in this case, you can see that when the price is moving in an uptrend, it usually flows above the moving average. You all know that. And when it's moving in a downtrend, it usually flow below the moving average, which is just a simple technique of identifying a trend. There is no need for you to draw trend lines. There is no need for you to pay attention into highs and lows unless maybe you're expecting something else. But by just looking at where price is in terms of below or above the moving average, you can easily know that, okay, it's a downward move or it's an upward move. And then when it comes to reversal, you need to know that we have reversal patterns in price action. I will not leave that one out. We have reversal patterns. For an example, I will just point out something like a head and shoulder pattern, something like this. So we have this pattern, which is a reversal pattern somehow. And then as a trader, you have to make your decision based on this pattern, that okay, now the market is moving down. There are a lot of different patterns, but I'm just illustrating with the head and shoulders. You have to make your decision based on this pattern that, okay, when prices breaks now the neckline, I'm ready to go short. But there are a lot of disadvantages as well with only relying on the patterns, because sometimes you need to know that a lot of patterns are clearly visible, or a lot of traders, they identify this pattern after they are being formed. Maybe a trader is going to identify that there was a head and shoulder only after the price is somewhere around here. Then you can say, wow, there was a head and shoulder there. But it's very, very difficult for traders to just identify it here and then execute their trade from there, because they have identified the patterns in the past. Now, this is a matter of experience. A lot of traders, they've followed these patterns, and in some cases this pattern didn't work for them, obviously because they depended only on those patterns. As I'm trying to rebuke that behavior in this video, they depended solely on those patterns and they didn't work, and then now they only wait for a pattern to be complete and then they will react from it. And all of a sudden, when they try to say, okay, it's a downtrend, and then the market move all the way up. But if you will implement such methods like the moving average, it will be easy for you to go about reversal, because here, once you see price breaching the moving average, firstly, for the fact that price breaches the moving average, it is not necessarily a meaning of a reversal. Price can breach and still go back in. But once you see the price breaching the moving average and then now giving you something interesting like this kind of a behavior, then that's where you have to act there and there. When you see this is in a trend line terminology, this is some kind of a retest. We can see that, okay, the price broke the moving average, which was using it as some kind of a supporting trend line, if I may say. It broke it, and it then used it as some kind of a resisting trend line. So this here is a clear sign that, okay, now the market is likely to continue giving you lower highs and lower lows. Then you have to react from such moves as a trader. And then when it comes to reacting from such a move, or from such touches that are being displayed by the moving average, it's not just a matter of saying, okay, for the fact that price is here, I'm then gonna sell. For the fact that price is touching here, I'm then gonna sell. It's not like that. You don't have to do it like that, but you have to treat it as your primary signal and then add a little bit of confirmation. What am I talking about? Now, for an example, what I always say is that it's not important that price have touched a key level, but what is important is how the price approach that key level and how is it reacting from that key level. For an example, you can see here, I'll just illustrate with this wave here. We can see this wave, it went up. We can see, if I may just indicate some patterns, we can see below we have some simple lows, and above we have some simple highs. So we can see that it's the market flowing all the way up. I will not go to smaller time frames because I just want to keep this video short. If you can see here, we have highs and lows as this wave proceeds. We have highs and we have lows, and we have something interesting. As the price is approaching that level, we have a beautiful simple resistance here taking place. You can see that now the candles are no longer getting a little bit higher. they're getting stuck somewhere around here, which can tell you something that, okay, because now I received this low, which is not higher than the previous one, then this is some kind of an information that I have to keep in mind and act or react from it. And then when you see the price breaking this flow, going all the way below, and after giving you a signal of being resisted from that moving average, then you have to act from there and there as a trader. There is nothing to wait for. So you have to add this confirmation or this analysis that I just highlighted for this method to simply work for you. So it's not a matter of relying maybe only on trend lines, because as I showed earlier, they require a lot of analysis, and a lot of traders, they are not ready to do it. So you have to add other tools that will simplify that process. So the moving average, for me, it has been one of the best tools. So I use it a lot, and I believe that if you can implement it as well and with practice, it will really improve your trading. So I'm just gonna keep it short and leave it here. Thank you guys for watching.